welcome. You're watching Ask Profit on NDTV Profit, and I'm your host Himakshi Bahuguna.
And I'm your host Malika Mishra. In the next 1 hour or so, we will be together taking up all your queries. So don't forget to call us on the numbers flashing on your screen. You can also write to us on WhatsApp. Both the numbers are flashing on your screen as we speak. And on the show, gentlemen and ladies and gentlemen, we are being joined by Prashant Tapse, Senior VP Research Analyst at Mehta Equities on the fundamentals, and Kushal Gandhi of Stocksbox on the technicals. Let's welcome to the show, gentlemen. Let's begin with our first question. Prasad has written to us from Hyderabad. He holds 68 shares of Anant Raj at 739 apiece, and he is currently in a loss of over 14,000. He is asking, what is the reason for falling this much? What is the reason for the stock falling this much? And should he hold or average it at the moment? A couple of things about the stock. The stock has been in focus because Anant Raj has been a darling of stock lovers betting on stocks driven by data centers. But now that we have DeepSeek in the picture offering services at a cheaper cost and perhaps sparking fresh competition, the stock has taken a massive beating of close to 20% in the past 2 sessions. And this is, of course, after it has gained about 188% in FY25. So this is quite a sudden disappointment that the stock is currently feeling because of DeepSeek and, a cheaper entrant in the AI space. So Kushal, let me go to you on this one. How do you see Anant Raj and its peers pan out in the future because of this entire, AI battle that's currently going on?
Well, speaking of Anant Raj, the stock has almost been into distribution mode, and I think from the previous trading session, it's broken down some very crucial support zone here, 780. Now that comes on monumental volume. It's the highest volume recorded for the quarter. And today, even if you see, we've seen some very nice follow through of it's almost at a lower socket on further incremental volume. So that's saying something that the selling pressure is quite heavy. And I believe that, it's plunged below the 200 DMS. The selling pressure might sustain further. So it's best to sell. It's best to sell at the current market price.
Okay, and I would also like to know your view,
Kushal,
but I just spoke to Kushal. 1 second. Prashant. I'm so sorry. I'm a little bad with names, but Prashant, what is your view on this space? Because Kushal did comment on the stock, but I'd also like to know your view on this entire space.
I think you rightly said it was a darling stock for last 3 to 6 months back, post the results and their announcements to invest a lot of money into data center. But suddenly the Trump 2.0, which started making a lot of noise in the data center, as well as the yesterday's biggest crash with respect to the DeepSeek, the cheapest chat GPT kind of model. So I think there's a big question about the data center viability, and I think the way Anant Raj has not taken a lot of expansion plan and a fund has been already deployed. So I think it will be big breakout for them. So on the valuation side, again, I think it was trading almost near 80 to 85 P forward, but now post this correction from last 3 to 4 days, I think it has come down to 40 to 50 forward P. So I think still one has to wait and watch for the stock to get settled down. I think the management has to give some kind of update regarding their data center and their impact through the DeepSeek headlines. So then only we can think of taking a long call on in this counter.
All right, so that's a view coming in on Anant Raj for long term. With that, we have another WhatsApp query. So Vijay Mudliar has written to us from Pune, and he is asking whether, he says that he's holding 11,388 he's bought 20 shares of Maharashtra Scooter at 11,388, and so he's asking whether he should hold or sell the counter. So the stock has largely given negative returns so far this year, down over 5% year to date, and also our viewers sitting on losses too, as the script currently is trading around 9,000 levels. Kushal, coming to you, since he hasn't mentioned the time horizon, is it advisable for him to stay invested for short term?
No, it's just to get out of the stock simply because the stock is trading very thinly near crucial support zone near 200 DMA. Again, it's quite oscillating near 200 DMA, and I feel the selling pressure might sustain once it breaches below 8,950 odds. So my sense is to sell the stock because comparing the relative strength, also the stock looks quite poor, and like he said, like 200 DMA is likely to act as immediate overhead resistance. So any meaningful recovery, I'm anticipating that would get rejected. So it's best to get out at the current market price.
Shan, do you hold the same view for the long term?
I think no, because this is a Hoodco company with the group company of Bajaj. I think valuation will always be a concern. Again, there will be a good discount between the investment value as well as the Hoodco value. So I think still there is a lot of downside being expected with respect to valuations. I think anywhere between 6,000 to 7,000 can be a level where I can get a very comfortable level with respect to fundamental story.
Okay, and now we have Sanjeev joining us on the phone line from Tamil Nadu. Hi Sanjeev, good evening.
Hi, good evening. How are you? Fine.
Thank you so much for calling us. Please go ahead with your question.
I got around 500 shares of Kansai Nerolac at 290.
Okay.
So, is it better to hold or will it recover?
Understood. Sanjeev, when did you buy these 290 shares? Sorry,
Around,
500 shares?
That is around 3 months back.
3 months back. Okay.
Yeah.
And was there any specific reason why you invested in this paint company?
Because looking at the competition in the industry, I felt that Kansai, in terms of valuation, it is attractive. It was attractive, so that's the reason I went for it.
Okay, understood. And you want a long-term view or a short-term one?
Yeah, long-term view.
Long-term view. Okay. Let's take this question to Prashant. Prashant, Sanjeev holds 500 shares of Kansai Nerolac paints at 290 a piece, and the stock is currently trading around 230 levels. So he sits on a substantial amount of loss at the moment. And the stock also has not been pretty attractive on the charts. If you see the 1 year trajectory of how the counter has performed, what would your analysis of this company be?
I think overall the sector is still under pressure. I think if you see Asian Paints, Nerolac or Berger, all three companies are not performing well with respect to volume growth. So I think there are a lot of new entrants in the company like Jindal has, and also they already entered in the paint business. Birla Opus has already entered in the business. I think they are taking a lot of market share from these listed top three companies like Nerolac, Berger or Asian Paints. With respect to earnings, I think weaker earnings have been seen from last 2 to 3 quarters. I don't see any earning upgrades in the near term. I think again we need to see a lot of downside in the stock as of now. But overall, with respect to paint as a sector, there is a lot of dependability on the crude as well. So I think that is also not so well attractive to the paint sector. So for me, again, I think wait and watch. What he has bought at valuation, yes, this stock in the 4 best paint stocks, this is the only one stock which is trading at a cheaper 30p almost forward, and the largest Asian Paints is trading at 45p. So on a valuation base, very, very much comfortable, but I think downside is still there to come in the stock.
All right, so that's a view coming in. With that, let's go across to one more caller from Bengaluru. Hi Sachin, good evening.
Good evening, madam.
Thanks for calling in. How can we help you?
Madam, actually, I have taken 500 shares of IREDA at 188 rupees.
Okay.
When it will cross, madam, 220 like in short term, I am asking about.
All right, and you've recently purchased it, I believe.
Yes, madam. Yes, madam. Yesterday only I have taken.
Yeah, because it's currently hovering around the same levels there. So, short-term view on IREDA.
And madam, why IREDA share is too much volatile, and I have to ask this, madam.
Yes. Kushal, coming straight to you, how is it faring on the charts? Because I can see that the last, when it peaked was in August, and since then the stock has been declining. So what do you have to say for the short term? Is it advisable for him to stay invested in it?
Well, I have a negative outlook on the stock, simply because just running a cancel, I mean, the price trend remains quite poor, relative to its last 12-month performance, as well as to Nifty 50 as the benchmark index. Now, that has resulted in decline, deteriorating buyers' demand and EPS trend as well. And talking about the price structure, it's trading with low highs. And again, the stock is trading below the 200 DMA with a negative crossover with its 50 DMA. So I think the bearish implications might sustain for a while longer. So it's best to exit at the current market juncture.
Okay. And now we have Anant joining us on the phone line from Bangalore. Hi Anant, good evening.
Hi, good evening. How are you?
I'm good. Thank you for calling us. Please go ahead with your question.
Yeah, I was holding Transformer and Rectifiers.
Okay.
They're 100 stocks. From a couple of months, I'm holding it at 850. And I did not book the profits.
Okay.
However, the results were also, very good. And I actually heard the, con call also. Everything was good.
Okay.
But after hitting the 1,200 level, it has
It has been falling.
giving lower circuit.
Okay.
So I just wanted to know. I don't mind holding it for another 1 or 2 years.
Okay.
But I would like to know, is it a portfolio stock? Can I hold it for 1 or 2 years?
Understood. Prashant, let's take this question to you. So Anant holds 100 shares of transformers and rectifiers at 850 apiece, and the stock is currently trading around 854 at the moment. And he invested in this just a couple of months back, and he wants to stay invested in the stock for the next 1 or 2 years. Couple of interesting things and also confusing things about this particular counter is the fact that while it has jumped over 1,100% in the last 2 years, the stock is facing pressure amid high volatility. What is happening? If you could explain, and also, give us a strategy of how to stay invested in this stock. Should he aggregate more? Should he buy more? Or just remain holding 100 shares of this company?
I think he should add more on the more downside. I think there are a lot of actions seen in the company from last 1 year. I think there are a lot of corporate actions being done. There are a lot of investments have been done to expand their portfolios, they expand their capacities as well as their plant capacity. So that has led to have a lot of good cash flows being expected for a long-term investors. For me, it's a portfolio stock, not a short-term stock. I think for a 1 or 2 year holding, one should buy this at every dip. Today, the way the stock has hidden down 5% lower circuit, it was only because of profit booking attempt in the mid-cap and large-cap sector as a whole. So overall, for me, fundamental, very strong company, a decent growth company for long-term investors, and I think buy more on dips.
All right, that's the view coming in on transformers and rectifiers. With that, we have a caller from Bengaluru. Hi, Sayed.
Madam, I have a query for Prince Pipe.
Okay.
I have 1,200 stocks at 740 level.
Right.
I can hold for 2 years.
Okay, and when did you buy exactly?
Madam, it's almost 1 year.
It's almost 1 year, because I can see that you are sitting on a very big loss over there, almost 4.5 lakh rupees there. So, and the company has delivered, if we talk about the company's performance, it has delivered poor sales growth of almost 10.3% over the past 5 years. And since August, the stock has been, just declining. So, since you're asking for a long-term view on it, Prashant, I'd like to come to you. How do you see, what are the fundamentals of Prince Pipes and Fittings looking like? Because as the charts suggest, it has been seeing a downtrend there.
As per price, I think, yes, it is underperformed from last 12 months. But I think on the valuation side, it's a very decent company with almost ROCR of 15% and ROE of around 11% and dividend yield of 1%. But I think because of the smaller market share in the market, in the pipe business, it is only holding 5% market share when it comes to the market leader, who is Supreme Industries, Astral, Finolex Pipes and all. I think the margins are very high, and this company is facing a lot of pressure in terms of getting into a lot of other states and going towards expansion plan. So there are a lot of troubles in the company right now. But again, I'm not recommending him to exit at this point of time, as he's a long-term investor. I think at least next 12 months there would be a good at least stability in the company, as well as the way how infrastructure focus is there with the government. I think pipe as a business, I think it will be morely focused, and I think they will at least recover his losses for next 1 year holding. So hold for time being.
Okay.
Okay, so it's a hold on that particular counter. We have Shankar joining us on the phone line from Karnataka. Hi Shankar, good evening.
Hi ma'am, good evening ma'am.
Good evening, please go ahead with your question.
Ma'am, KPIT Technology 137 shares, average price 1373 ma'am. 1 month in the consolidation ma'am. Tomorrow KPIT Technology result ma'am.
Okay, so you want a short-term view?
6 months ma'am.
6 months view. Okay. Kushal, let's take this question to you because our viewer wants a very short-term view on this particular stock. KPIT Tech is involved in clean energy, right? But if you look at the stock per se, it has been a little confusing on the charts because it has been trading in different price bands in the past 1 year. So if you see from an investment perspective, what would you suggest, Shankar, to do? Because if the pace at which the price bands of the stock has been changing can confuse the way forward. What would your suggestion be? And plus, also an interesting part about the stock is that it is trading at 13.8 times its book value, although its PE ratio is sort of okay as compared to its peers. So give us a view.
Speaking of KPIT, it's a definitely a sell, simply because, like you've seen, the stock is under distribution, and once it breaches below 1230 levels, it would confirm a head and shoulder pattern, which would invite further selling pressure. Now, since the stock has been under distribution, so I mean, the stock has seen some significant deterioration in terms of buyers' demand and in terms of price strength as compared to its last 12-month performance, as well as compared to Nifty 50. And that has led to some deteriorating in EPS strength as well. So I think on technical and fundamental parameters, the stock is getting weaker. But since he's holding and the results are due tomorrow, so I would recommend him to hold with a very strict stop loss near 12,225 is the stop loss levels. Hold it very strictly with those levels keeping in mind. If those levels are breached, I'm expecting further selling pressure to continue.
Okay, but Kushal, since your view on this stock has been a little pessimistic, I'd like to know, is there any other stock in the same domain that you would be optimistic about?
Well, from IT, I really like Wipro. I mean, the stock has undergone a very nice accumulation, pattern formations, and it shows some strength. Even the results are fantastic, and we've seen some follow through after that. So it shows some high conviction in terms of momentum, in terms of price action, as well as risk reward. And I think that's it looks quite opportunistic from a short term point of view, as well as it looks like a good portfolio add.
All right, so that's the view coming in. With that, we have another caller from Kerala. Hi, Veshad.
Yeah, good evening all.
Good evening. How can we help you?
Yeah, actually I'm holding a TCS 80 shares of rupees 4,040.
Okay.
So I need to know both the fundamental and technical.
So, and when did you purchase it?
I purchased recently. I mean, I have consolidated this share by today also. So it became the average of 4,040.
And 4,040?
Yeah.
Yeah, because that's what, there was a confusion there. So it's 4,040 at which you've bought, and currently the stock is down over 1%, not over 1%, just 0.5% there. And so Kushal, since he's asking for both the short-term and long-term view on it, I'd like to come to you on it. How is TCS faring on the charts?
We have a neutral view. TCS is trading very precariously near the demand zone. So I would recommend him to hold with a very strict stop loss near 3920. That's the pivotal support. If that support is taken down, I'm expecting selling pressure to continue. So for among the large caps, I feel TCS is a bit poorly placed as compared to Infosys or the likes of HCL Tech or Wipro for that matter. So probably you can look forward to switching the ideas towards Wipro or HCL Tech or Infosys for that matter.
All right. So buy on HCL Tech is what Kushal is suggesting. Prashant, do you also hold the same view for the fund for the long term?
I think yes, I go with Kushal. Overall, with respect to valuation, I think it is trading at 20-25 times forward. We need to understand the Q3 earnings, which are really fantastic. I think the way they have done their deals of $10 billion, highest in the history, I think that is giving a good visibility for a stock for at least medium term to long term. Short term, there may be some kind of pressure due to all the global headlines and profit booking attempt in the sector. But I think I will recommend him to hold it for at least 6 months to 12 months from current levels.
Okay. That's the view coming in on TCS. Now let's go across to another caller. Arjun is joining us from Mumbai. Hi Arjun, good evening.
Hi, good evening.
Please go ahead with your question.
So I am holding Jio Financial Services shares. I have 152 shares, which I got because I had RIL shares already.
Okay.
And I want to understand the long-term outlook of around 8 to 10 years, that can it cross 1,000 rupees levels? And at what levels can I buy more? Are the current levels correct for it, or should I wait for some more time because the share has been going down a bit since few days?
Right. Arjun, I clearly understand from your question that you're very interested in the stock because you're clearly asking about a very long-term perspective and you want to hold on to this company. What's the reason behind your interest in Jio Financial Services?
So in my portfolio, I don't have this particular sector. And I was looking to invest in it. and therefore I'm thinking if I can understand long-term outlook of this, then I can make that decision accordingly.
Okay, understood. Prashant, let's take this question to you. Arjun holds 152 shares of Jio Financial Services, and the current price is around 234. And as he rightly mentioned, the stock has not just been falling in the past couple of days, but if you check the one-year performance and a little more ahead of that, it has been falling consistently on the charts. Plus, it's also hovering around its 52-week low. What is your take on this stock, number one, and do you think it would reach 1,000 levels in the next decade or so? Because that was Arjun's query. And second, what is your opinion about this space?
I think fundamentally very strong company, the way they have built their business model with respect to all the financial products like digital loan, AMC business, the retail broking business, as well as insurance business. So, but still the business is into a nascent stage. I think it will take its own time, at least 1 or 2 years, to grow up to the larger scale. So I think the way he has, Arjun has asked us to have a holding view of 8 to 10 years. Obviously, yes, I may not comment on the price target, but obviously, yes, it can be a multi-bagger story for him with the 8 to 10 years story. Yes, for next 12 months, I think all the businesses which they have entered in previous 12 months, they will start doing some kind of business activities. Obviously, profitability matters a lot because all these three segments are highly fragmented, highly crowded in terms of insurance business, broking business, as well as the AMC business. Obviously, it will take its own time next 12 months. But obviously, we know how Reliance or Jio has when they enter into any business, they will obviously disturb and they make sure they want to be on a top 5, 1 or 2 players. So with that view, I think 8 to 10 years is a great time period which he is going to give this business. And I think you need to add more at this point of time. 220, 230 should be a level on a fundamental basis. I think 120 to 180 rupees would be a value of Reliance shares which it is into the balance sheet. So plus some premium one should be giving it to the business model what they are going to enter into the segments. Also 220 to 40 can be a range one should start accumulating this stock with a view of 8 to 10 years. So overall strong hold and as a multi-bagger story.
Strong view coming in on Jio Financials by Prashant. With that, we have a caller from Tirupati. Hi Venkat, thanks for calling in.
Hi, thank you.
Yes,
good evening all.
Good evening. How can we help you?
Yeah, I have Yatharth Hospital shares of 60. But now it is decreased already 26%.
Yes.
So I have 2 to 3 years of origin.
Okay. And what
should I add now or till wait?
And what was the thought process behind purchasing Yatharth Hospital and Trauma Care Services?
Yeah, many of the analysts are suggesting that to buy that hospital stocks.
Okay.
So it may have a good future nearby 2-3 years.
Right.
And Yatharth Hospital is expanding its hospitals recently in Uttar Pradesh also. So
okay.
That is my view.
Okay. So on a friendly advice, he has bought the counter. And if I can talk about the performance of the counter, so although it has been up over 8% in the past 1 year, but in the last 1 month, the stock has fallen significantly over 26%. And since Venkat is looking for a long-term view on it, Prashant, how are the fundamentals of this counter looking like?
I think fundamentally very strong with respect to the hospitality business model with the ROC of 25% and above. I think it's a great business. Again, the segment is really attractive for all the investors. The way they are expanding in Noida, Greater Noida, in Uttar Pradesh, I think that will create a lot of businesses going forward. But obviously, yes, the recent sell-off was only on the back of valuations which were above 50 PE. But now, after this correction, the stock has come down to 30 PE, almost the cheapest in the hospital sector. But I am very much bullish on the hospital as a sector, but not on Yatharth. I like Apollo Hospital as a stock for a long-term investment, but obviously he is holding Yatharth right now. So my view would be hold.
Right. And those who have just started investing, so is it advisable for them to enter at these levels?
I think in this sector, one should go with the larger stock like Apollo Hospitals.
Okay, and now we have Jagdish joining us on the phone line from Vizag. Hi, Jagdish.
Yeah, good evening, ma'am.
Good evening. How are you doing?
Yeah.
Fine. Thank you.
Please go ahead with your question.
Yeah, I have purchased the Apar Industries shares last 6 months back at the price of 6,500.
Okay.
Now it's got continuously dropping down from 10,000 around.
Right.
What shall I do in this case? I will continue the same, or I need to wait for some more time?
Okay. Before I take this question to our guest Jagdish, I'd like to understand what was your reason behind purchasing shares of Apar Industries?
Okay, then. Yeah.
Sorry, did you hear my question? I'm asking, was there any particular reason behind investing in the stock? Did you read anything about it?
Yeah, ma'am. It's a power sector. It's a boosting time, transformers and all. So that is the reason I continue for this.
Okay, understood. Let's take this question to Prashant because Jagdish is asking for a long-term view. Prashant, Jagdish holds approximately 28 shares of Apar Industries at 6,500 levels, and the current level at which it is trading is around 7,000. What's happened with the stock is quite interesting because it moved upwards in the past 1 year, but it fell recently after its Q3 earnings because net profits were extremely low. What do you think about this particular counter in the electricity space?
I think that the sector which is into has a high competition from China. I think a lot of Chinese companies are doing the same kind of products, and they have a lot of cheaper products which has been dumped in India. So I think that has given a lot of pressure for their business model, and the way their Q3 earnings were so weak, I think the management also has given a guidance that Chinese intervention in the business model is very much high, and I think that is giving a lot of pressure for their short-term business model. Q2 earnings were flat, but Q3 earnings were really bad to understand. I think my view on this stock would be exit at this point of time. At least he is making some profit out of this. I think another 2-3 weeks again, stock can go down to 55 or 65,000 rupees per share. So I think my view would be sell at this point of time.
Okay, so since your view is sell, so do you suggest any other counters?
I think in the
this
power
space?
sector, I like two stocks. One is Tata Power as well as Suzlon. So these two stocks should do well in the power sector.
So with that, we'll have to slip into a short break. Keep sending in your queries, viewers, on WhatsApp and call in. We'll be right back for Ask Profit. Stay tuned to NDTV Profit.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Well, the union budget is right around the corner. It's a very interesting time leading up to the budget as well for the policymakers as well as, us as shareholders, because we see a lot of movement in the Nifty as well as speculations are rife with what could be some of the measures that are announced in this particular budget as well as has been in each one going into the same. We look at some of the key moves that have seen in the Nifty before as well as after the budget and get you some of the biggest measures that were announced in these budgets and what could have led to the strong Nifty reactions. Let's first look at 2024, because we had two budgets announced in this particular year. One was post the elections as well, and we did see a 1.5% move in just a week after, and that momentum was continued in the month as well. Leading into this budget, there were a lot of speculation, so we saw a downward reaction of the Nifty in the past week, and we did see some of the measures such as the standard deduction being increased to 75,000 for salaried employees from 50,000 earlier, as well as the new tax regime now in having tax-free status for up to 3 lakh rupees per annum for the investors as well. Apart from that, we saw custom duty reductions on mobile phones, gold, as well as chargers as well. And these were some of the key moves in this particular budget. Leading up to the election, we had, the 2024 budget in February as well. Let's see some of the reactions, as you can see in this particular time frame as well. One of the key moves was increasing the budget for capital expenditures to 11 lakh crores, the first and a very huge budget as well compared to the last decade. And we did see one of the positive reactions in the week and the month after as well. For 2023, it was a very budget going into this particular budget. Speculations were rife. We did see a negative 2% reaction just in the week before leading up to the budget as well. While the momentum wasn't very strong, and in this particular budget, we did see the new tax regime increasing the rebate to 7 lakhs. But apart from that, there were some continuations of policy measures, but nothing big to report as for. For 2022, it was a very interesting budget because we did see a strong reaction going into the budget just a week before by roughly about 2.5% on the positive side. But in the next week, as well as the month after, we saw a sharp reaction on negative 5% of the Nifty reactions. Some of the key measures were like they had involved rupees 2 lakh crores as additional credit to MSME firms. Apart from that, we also saw roughly 48,000 being allocated for building 80 lakh houses. But none of these measures could give the big positive boost, and this was the first such non-pandemic budget, so as to say, because of the other measures were involved as well. In 2021, we saw
Welcome back, viewers. You're watching Ask Profit on NDTV Profit. We're joined by Prashant Tapse on the fundamentals and Kushal Gandhi on the technicals. Viewers, just a quick reminder that this is your chance to get all your stock-related queries answered. So don't forget to call us on the numbers that are flashing on your screens at the moment. Let's begin with our first caller. Jigar is joining us on the phone line from Mumbai. Hi, Jigar. Good evening. Please go ahead with your question.
Hello.
Hello.
Yeah, hi. This is Jigar Rajani here from Mumbai.
Yes, Jigar, please go ahead with your question.
Yeah, and my query is I'm holding Sterling and Wilson shares.
Okay.
And I'm holding 300 shares at the rate of 450 rupees.
Okay.
And sadly, after buying, I got to know that I've bought at a very high PE. And the sector is also on a very high PE.
Yes.
And I'm stuck, so I really don't know what to do. Can you please guide me?
Definitely. And are you looking for a long-term view?
My view can be like 3 years, 2 or 3 years.
Understood. Understood. Prashant, let's take this question to you. Jigar has invested approximately 300 shares in Sterling and Wilson at 450 apiece. The stock is currently trading around 310 levels. So approximately over 130 rupees lesser than his investing price. And as he rightly mentioned, if you compare the PE number as compared to its peers, it's very high at 260 levels. And plus the return on equity in the past 1 year, or say in the past 3 years, has been negative, 150% less. And the stock price CAGR also has been around 49% in the negative territory in just the last 1 year. So if you just look at these two factors, it does not look like a very pessimistic investment. What would your suggestion to Prashant be, given all these factors?
I think my suggestion first would be exit this stock at this point in time. I think there are a lot of factors one should look at investing in this stock. One, you rightly said with respect to high P, low ROE is not a good business model right now. Earlier, the stock was part of Sapurji Palamji group. So the problem started when the group has a lot of debt exposure to the lot of other sectors, and the group company started selling the stake of Sterling Wilson to the Reliance Industry at a very low valuation deal. So I think that would be one reason why the stock is down from recent levels. Even though if you see the results, I think they were not as street estimations. There are a lot of pressure still in the business model. EBITDA is, they are feeling very difficult to get their EBITDA into positive. So a lot of pressure in the stock, in the business model. A lot of other sectors are also, other stocks also doing well in the same segment, which is into EPC construction. So I see the pressure would continue for at least another 3 to 6 months coming down the line. But my call would be exit at this point of time. You may get a lot of other stocks, something like L&T or Reliance Infra or Engineering India in the same EPC business on a better valuation, and downside there will be some limited to other stocks. But I think this counter has more downside still in the books, so I think one should exit at this point of time.
All right, so that's the view coming in by Prashant. With that, we have a query. So Vinod is calling in from Chennai. Hi, Vinod.
Hi.
Good evening.
How are you?
Yes, I'm good. Please go ahead with your query.
Actually, I'm planning to invest in auto sector now.
Okay.
Since all the stocks are beaten down very badly.
Yeah.
So I thought this is the right time to accumulate more auto stocks.
Okay.
I want to know which stock can be accumulated for more than 2 years time horizon.
All right.
I don't mind even holding for more than 5 years also.
Okay, so you're a long-term investor.
Portfolio. Yeah.
Okay. Since Vinod is asking for stock picks there, so Prashant and Kushal, I'd like both on the short-term and long-term picks. So starting with you, Prashant, what are your top picks in the auto space?
I think two stocks. One would be Tata Motor on the large cap stock, and one would be on the mid cap stock, which is Ola Electric, which is trading at 65-70 levels at this point of time. Both have their own risk, but I think with the limited downside in the Tata Motors, I would like to play a lot for next 2 years with respect to the demerger story between the PV and CV. I think next financial year they will be doing this activity, and that will create a lot of shareholders value with respect to valuation concern. So Tata Motors, I think that would be a stock one should look at buying more on the tips. In the Ola, I think again some part of risk will add because of the ongoing concern with respect to the services and all. But I think for next 2 to 3 years there will be a lot of new variants which will be coming into markets, and it has already disturbed a lot of other players in the market and are holding 30% market share. So with the risk, I think buy Ola at this point of time. With the limited downside risk, we can buy Tata Motors. So I'm going with 4-wheeler as well as 2-wheeler.
All right, so Tata Motors and Ola Electric for long term. And Kushal, what are your picks for the short term?
Speaking of this auto sector, I still have a negative outlook. The index has been trading with lower lows and low high price structure, and it's trading below the 200 DM and 50 DM with a negative crossover. So I feel a nifty auto might still, run a bit sluggish going forward. But just from a stock point of view, I feel TVS Motor is very well poised. It's trading near a very crucial demand zone and showing some signs of recovery today. So amidst all the competitors, I feel TVS Motors can do well. Again, the stock's been showing some improving signs in its EPS trend and price trend as compared to its 12-month performance. So TVS Motors is one pick I would go with if it has to be within the auto segment.
Okay, and now we have Krishna Kumar joining us on the phone line from Chennai. Hi, Krishna Kumar. Good evening.
Good evening, ma'am.
Good evening. Please go ahead with your question.
I'm holding 50 shares of Kalyan Jewellers at the rate of 662.
Okay.
I want to know the long-term view.
Understood.
Long-term and short-term.
Understood. I would want to know, when did you purchase these shares?
December 30.
December 30th. Okay. And why Kalyan Jewellers?
The news was very positive at the time.
Okay. And you want a short-term view, right?
Yes, ma'am.
Okay. Kushal, let's take this question to you. Krishna Kumar has approximately 50 shares of Kalyan Jewellers at 662 apiece. And I suppose when he bought this in December, the stock was very much in its upward trajectory, but has sharply fallen since January. In fact, the Stock has declined approximately 8.92% in the past 5 trading sessions, has plunged approximately 40% in the past 1 month, 23% in the last 6 months, and in the last 1 year, that is just in the past 1 year, it did climb, but just about 20%. Also, the last results, the Q2 results were not very positive, while Q3 results are due on January 30th. Do you think, given the performance of this company on the stock market, is it a good investment to, go forward with? Because Kalyan Jewellers, one thing about jewelry companies is that they're very cyclic in nature. They perform well in a certain period when India is buying a lot of jewelry during the wedding season, and then they go down. What should the approach be here?
Stock at very high valuations. So I just have one recommendation, or rather one piece of advice is that if you get on the wrong train, be sure to get off at the first stop. The longer you wait on, the more expensive is the return trip going to be. So it's best to exit the positions because the stock looks very weak on fundamental and technical parameters both.
Right. So that's the view coming in on Kalyan Jewellers. Exit at the earliest. And let's go across to a caller from Ahmedabad. Hi, Devesh.
Hi, ma'am.
Good evening. How can we help you?
Ma'am, I have queries. I have been asking since 3 days, but today I got an opportunity.
Okay. Yes, please go ahead.
Yeah, ma'am, my question is regarding Premier Energies. I have bought it at around 1050, 50 shares I am holding.
Okay.
Yeah. Now, can I buy more shares or hold, or what to do now?
Yeah, so are you looking for a long-term view on it?
Yeah, ma'am, I can wait for 3 to 5 years. If company is good, I can hold.
Okay, because I can see that you are sitting on a loss of over 8,000 there, and since you've recently bought it, so if we look at the stock performance, so it has been, the current levels are same as last year September. So and since January, the stock has fallen very sharply there. Prashant, coming straight to you, how are the fundamentals of Premier Energies looking to you?
As per the industry understanding, I think they're into the solar cell manufacturing and the module manufacturing. It's a great in demand, but I think January there was some news with respect to Trump 2.0, who was giving some kind of understanding on the renewable energy as well as the solar panel story. So I think that was the trigger for the stock to come down from last 1 month. Prior to this, I think in terms of valuation, it was very much on a higher premium, even though today it's around more than 170 PE. So which with respect to valuation, very much uncomfortable right at this point of time. But the investor who is on the call right now, he is asking for 4 to 5 years view. I think yes, these kind of stories can do great in 4 to 5 years as a holding. But again, in a shorter period of time, there will be a lot of pain he has to undergo. So I think he has to wait for good levels to buy. I think Kushal can help him to understand the good levels to buy for a long-term investor. But time being, not comfortable to buy at this point of time.
Okay, and before that, is Devesh still on the line? Devesh, are you there on the line?
Yeah.
Devesh, I just wanted to ask that you consider any other company in this space, because you are sitting on a loss like a Vari or a NTPC Green for that matter.
I am interested in NTPC Green.
Okay. So, Kushal, coming to you, is it advisable for Devesh to stay invested in Premier Energies, or should he switch to other companies?
I would recommend him to exit his positions, at some higher levels. Now the stock is almost trading like a 20-21% from its mean. So there might be a possibility that there might be some mean reversion, some catch-up rally. But again, it could serve as a dead cat bounce. The stock's broken some very crucial demands on your 925 levels. So I think the selling pressure might sustain, but I would recommend him to exit his positions with any rise in the price trend.
Okay. Now we have Gopa joining us on the phone line from Delhi. Hi, Gopa. Good evening.
Yeah, hey, ma'am. I have around 500 shares of Bajaj Housing Finance. When I took
500 shares of Bajaj Housing Finance, right?
Yeah. Now the price I could got it 157.
Okay.
Now it's come down at 108 or 109 today.
Right.
Should I sell it or should I hold it? What is the future of the Bajaj Housing Finance? I just want to know.
Understood. Gopa, when did you invest in these shares?
When the IPO comes, the last 2, 3, 4, 5 months back.
Okay, okay.
Bajaj Housing recently comes from the IPO.
Okay, understood. And you're looking for a long-term view on Bajaj Housing Finance?
Yeah, I'm just asking, should I hold or should I sell it with a loss or it will go up in the future?
Got your question. Prashant, let's take this question to you. Gopa has invested 500 shares in Bajaj Housing Finance at 157 apiece, and the current price, as he said, is quite less than its buying price, around 110. That's the level at which it is trading, and the stock has been falling significantly in the past 1 year as well. However, the results of the company that were announced yesterday were not as bad. They posted like 25% rise in profit year on year, and the AUM also was great. But brokerages have been cutting target price on this company. What do you think Gopa's investment strategy towards this company should be? Because, he's sitting on losses and he's wondering whether it would, increase in the future. Prashant, this question is to you.
Yes, I'm closely tracking this company from last 2-3 months post his IPO. I think a lot of people bought this story at 150, 160 levels once it crosses, got listed in the exchanges. But the story is for 3 to 4 years. It's a portfolio stock, not a short-term or medium-term stock. I think the way they have given their results yesterday, I think the way they have grown up in.
So with that, I think there's some network issue there, but let's go across to a caller who's calling us from Hyderabad. Hi, Krishna. Good evening.
Hi, ma'am. Good evening.
How can we help you?
Ma'am, I'm holding Piramal Pharma stocks, 100 stocks at 245. I think the cost is now decreasing. I just wanted to know whether I can hold it or I can add more.
Yeah.
I just wanted to hold it for 1 year.
Okay, so a long-term view on it, and as I can see, as per the charts, so currently it's back on the same levels that it was in October, because in October, and then it saw peak during November, and now again the stock has been falling. But if the guests line is clear, so can we? Okay, so Kushal, since Prashant is not available currently, I'd like you to take charge and just tell us how is Piramal Pharma's faring on the chart.
Also, personal, just give a small outlook on Nifty Pharma. I believe that Nifty Pharma as an index has topped out on an intermediate basis. Now the stock has given a breakdown from a double top pattern, which usually indicates a trend reversal. So I believe that pharma as an industry can be under selling pressure over the coming weeks. So my sense is Piramal Pharma would follow the footsteps, and again it's forming like almost a near similar formation. The stock has been losing its momentum and strength as compared to Nifty 50 and general markets. So my sense is that Pharma, if he's holding, then probably I would recommend him to hold with a very strict stop loss near 200 levels. But I wouldn't recommend a fresh entry in the stock or in the sector for that matter.
And Prashant is back. Prashant, how are the fundamentals of Piramal Pharma looking like? Are you bullish on the company?
No, I'm not comfortable with respect to the valuation at this point of time with the ROC of almost 5%, ROE of less than 1%. Not comfortable to buy any pharma companies with these kind of valuations. In the PE, again, it's very expensive. I think it's trading by 500 times the XP right now. But overall, the CDMO business, I think there will be a lot of pressure from the US market with respect to Trump 2.0, who would like to have America first strategy, which is very negative for CDMO businesses, where contract manufacturing is the major part of business for Piramal. So not comfortable to buy at this point of time. I will be waiting at least for a great correction in the price, at least by 30-40% from the current prices.
And do you have any suggestions in the pharma space in particular? Although the sector is seeing a beating there.
I think yes, one should go with Granules as a stock. Even the stock has been down post its result, which were very much bad with respect to the Q3 earnings. EBITDA was down by almost 30%. So Granule would be one stock on a bounce back. I think technically it also looks good. Fundamentally, I tracked this company from last many years. So I think there's a good value been created for a long-term investor. And I think this downside should be an opportunity to buy.
Okay. That's the view on granules. It's a buy on granules. Let's take Praveen on the phone line. He's joining us from Karnataka. Hi, Praveen. Good evening.
Good evening, madam. All of you, good evening, madam.
Good evening.
Madam,
Thank you for calling.
JSW Infra 273 at rate of 190 shares, madam. Hold or exit, madam. Long term.
Okay. When did you buy these shares of JSW Infra?
Madam, 1 year back, madam.
1 year back. Okay. And you're looking for a long-term
Today result, what happened, madam?
Okay, I'll tell you. Because you're asking for the results, before I take the question to our guest, I'll tell you that JSW Infra, when it announced its results today, it posted a 32% rise in its net profit year on year at 335 crore, which is certainly a positive, and the total income of the company stood at around 1200 odd crores. And to give you further perspective on your investment, I'll take this question to Prashant, who is our fundamental expert. Prashant, as I just mentioned, although the company has posted approximately 32% rise in its net profit year on year for the October-December period, the stock has taken a beating in the past 1 month, especially since the start of the year. How do you see the trajectory of the stock from a long-term perspective?
I think one should understand the reason behind the fall. The way how GDP were down almost 22 months low. So there was a lot of expectation with respect to the growth in the exim business of India. So that was the only reason why the stock was down. But I think the Sajjan Jindal run business, infra business is very strong, and they're quite different from what Adani Port is doing. Adani Port is a asset heavy business, and I think JSW Infra is a asset light port business model, which is controlling major part of the South Indian ports, and having a lot of management contracts with a lot of small ports in the South India as well as in the eastern region. So overall, I track this company for many quarters. I think very fundamental, very strong. On a valuation point of view, again, it is trading at 40 times, little bit expensive, but I think best company will not be cheaper at this point of time. When we compare Adani Port, again, it is trading at 20 P. I think in valuation terms, Adani Port looks good, a good cash cow business, but on the valuation side, 40 P could be expensive, but for me, hold would be my recommendation. My target would be anywhere between 300, 350 on a fundamental basis.
All right, so that's a whole view coming in on JSW Infra. With that, we have a caller from Chennai. Hi, Odesh.
Yes, ma'am.
Good evening. How can we help you?
Good evening, ma'am. Ma'am, I have CG Power.
Okay.
CG Power 25 is stock at the price of 740.
Yes.
Yes, ma'am.
And when did you purchase it?
I purchased in June or July.
All right, because CG Power today just came up with its Q3 earnings, and I'd like to address it. The net profit was down 67.8%, revenue was up 27.1%, EBITDA was up 27%, and margin was at 13.2%, which was flat as compared to last year. So, and also CG Power has approved investment of 712 crore for transformer plant of capacity 45,000 MVA there. So, since you're looking for a long-term view, Prashant, what do you have to say on the company? How does it look for the long term?
I think on a valuation point of view, again, long-term investors should not enter at this point of time. Even if you consider the Q3 earnings you just explained, I think it was in line with what market was expecting. The market was expecting a sharp fall in their profitabilities. So I think, again, one should wait and watch for more downside in the price correction. I think it has to match the earnings, it really matters a lot in the pricing. So I think overall, if you see fundamental, again, Murugappa Group, a long-term investor, obviously they have rewarded their investors. If you see last 5 years, I think CG Power has given a good return on investment for all the investors. But for a shorter period of time, I think there will be a good correction in the prices. Not comfortable to advise him to buy or more accumulated at this point of time.
Okay.
Okay, now we have Ravi joining us on the call from Hyderabad. Hi, Ravi. Good evening.
Yeah, hi.
Please go ahead with your question.
Yeah, my query is regarding IOCL. I mean, since it's been low at 52 weeks,
okay,
is it a good time to buy? And my timeline is for 6 to 8 months. And can I expect the price will go upwards moving forward?
Okay. Kushal, let's take this question quickly to you. The stock has taken a beating. It has fallen approximately 30% in the past 6 months. But when it announced its results yesterday, it reported like 11% rise in revenue on the back of good sales volumes. What's your take on this particular counter, and how do you see it performing in the next 6 to 8 months?
I have a negative outlook on Indian Oil Corporation simply because the stock has extremely poor EPS strength. Even the price strength compared to its previous 12-month performance and compared to general markets, the strength is extremely poor at this point, which has resulted in extremely poor buyer demand as well. Now it has no strength from the sectoral group as well. And again, from a price structure point of view, it's been trading with a constant lower high, lower low price structure. After breaching the supports of 155. So I think the selling pressure might continue because the 50 DMA is constantly acting as supply zone. So any meaningful recovery is getting constantly rejected. So I believe that the selling pressure might continue for a while, and it's best to enter the stock once it's reclaimed the levels of 144, 145 odds on a closing basis.
All right. So that's the view coming in. Now, with that, I'm afraid that we are running out of time. But thank you, Prashant and Kushal, for being on the show with us and helping our viewers with their queries. It's always a pleasure having you both. And viewers, that's all the time we had on this edition of Ask Profit. Stay tuned to NDTV Profit for more news and updates.
Stay tuned.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
I present the budget for a historic
The union budget is around the corner. What could be announced and how will it impact the market? UBS comes out with a key report. UBS thinks the impact of the budget on the stock market would be muted as the capital expenditure and consumption boost could be limited in this time around. But what does UBS estimate the government could announce? We bring you what UBS expects in 5 key aspects. The first one's, of course, the impact on the stock market. Government's fiscal deficit, which occurs when the government's total expenditure exceeds its income. The third aspect would be infra companies to be impacted in this key budget, changes in the capital market structure and taxation, and finally, what government companies could be divested this time around. Now, UBS feels that the budget might not boost the market as the expenditure on consumption as well as capex might be lesser compared to the previous budget. Now, this time it is assumed that if the fiscal deficit is contained at 4.5% of the GDP in 2026, it could of course be a shortfall met by borrowings. Apart from this, UBS feels if the capital expenditure for 2026 is budgeted at a similar levels of rupees 11 lakh crores, similar to the FY25 budgeted capital expenditure, it could be negative for companies like L&T as well as the other core infrastructure companies. UBS also says the importance of domestic orders for the infrastructure companies is now higher given the limited overseas opportunities, especially in the Middle East. In this regard, UBS thinks companies exposed to private emerging infrastructure and power value chains are relatively better placed given the private sector capex growth remains in the double digit. Now, UBS also does not expect any changes in the tax policy, especially for the capital markets in their base case estimates. UBS also expects the administration to maintain a lower target for divestments of
Benchmarks recover from yesterday's fall to end higher, powered by realty and financial